You are listening to Mining Stock Education.
It's been so frustrating for so many people for so long, myself included, for the past few years, that to get out now would be a real shame, because now is just when it's starting to get good, because now the generalist investor is finally starting to come in here, because as I've said, over several interviews, that the one thing we needed in this sector was Western investment demand.
In today's interview, you'll hear the monthly update from Dr. David Erfle over at juniorminerjunkiewithay.com. I'm Bill Powers. It's Mining Stock Education. Dave, thanks for coming back onto the show. And right before we hit record, I looked at the gold and silver numbers. Gold is at $34.23, silver's at $32.55. And when I did a little division there, that puts us at about 105 on the silver to gold, gold to silver ratio, which is quite high, because I think at some peaks, right, bull peaks, you can get silver down to about 35, and we're at 105. What's the commentary?
The average is around 60, 65 to 1 is what the historical average is now. But lately, during this bull market, now the industrial component in silver is a lot higher than it was back during the last bull market. In the last bull market, it was about 50-50. Now it's about 40-60. So the silver price is silver's basically that it's that industrial component that's keeping silver down, right? So it's, central banks, they've been buying gold like crazy, but they don't buy gold stocks, they don't buy silver. And if you take a look at silver and the gold stocks, their charts are pretty much in sympathy.
So is there a reversion-to-mean trade with silver right now, even if you don't think it's super bullish near term, just based on the gold to silver ratio?
Absolutely, yeah. The gold-silver ratio is only hit triple digits a couple times in history. I think it barely got there during the Hunt brothers, and that was manipulation, right? Hunt brothers were trying to corner the market. So the gold-silver ratio spiked to around 100, but it didn't stay there long. And then the last time this happened, the most recent time, was during the COVID spike, when it spiked to 124. So I think that as far as the ratio is concerned, that there's a possibility we might see it spike up there again. Because if you take a look at the gold price here, it's extremely overbought on a long-term basis. So you look at the RSI on a monthly basis, it's getting up there towards 90. And if you take a look at what happened with the gold stocks today on Monday, they came out of the gate hot, and you saw a lot of profit taking come in. Sure, the profit taking came in as the stock market is taking as well. But ever since that sharp reversal a couple of weeks ago, the entire gold sector has been like this island of safety in a sea of volatility, especially gold stocks also. So I think what the mining sector is telling us today is gold is ready to top out here and correct for a while, which would be a healthy correction. It's basically gone parabolic. You look at the ascent levels, right? You've had 3 separate ascent levels where it's starting to go parabolic. And if you take a look at the, like I said, the mining stocks today, that strength was being sold. So it's investors taking profits. If you take a look at the gold price, it's gone up now 27% this year in less than 4 months, while it went up 27% all of last year, and it's been outperforming everything. Right. Most recently, it's been outperforming bonds and the U.S. dollar in a big way. So investors are like, where's my safety? The safety has been gold. And if you take a look at what happened overnight in China, also, they've got this new ATM machine where you can put your gold jewelry in this machine. It melts it for you, and in like 30 minutes, you've got a check. And there's a lineup for that machine. I saw the story today. So yeah, it's getting, it's getting, like I said, the gold price is getting parabolic. As far as Asia is concerned, it's the FOMO is really happening. But as far as Western investors are concerned, they're just starting to get on the gold train. I mean, last week we had a huge ETF inflow in the GLD. But before that, we really haven't had, the ETFs sales had been going down. So just recently, we've had Western investors finally start to get into this gold market. So we're nowhere near a longer term peak, but a short term in an intermediate peak. I think we're reaching that right now, or at some point this week.
Why are the Asian investors, another way, selling right now?
Well, I see them as far as, I don't know about selling, but like I said, they're selling their jewelry to turn it into cash. So they see,
but they store their wealth via jewelry, gold, right? That's one of the cultural.
Exactly. So yeah, I mean, they probably see that, hey, the gold price has gone crazy over here. We've been buying gold for a long time. We've got our central bank buying gold. We see Eastern central banks buying gold. I've got some bills, whatever. I got this jewelry sitting around. It's not helping me any. I could go to this machine and I could get instant cash. So I think that's probably the reason.
Okay. Trump and Powell are feuding. I know you're aware of this. Powell says his mandate is maximum employment and price stability, and Trump's tariffs are not giving me price stability, so I'm not going to commit to do anything that he wants with interest rates. Do you have a forecast of how this plays out, Dave?
I mean, it's just another catalyst in a long line of catalysts for the gold price. I mean, over the weekend on Sunday, the Chicago Federal Reserve President, Austin Goolsbee, said on Sunday, he was asked about that question, and he's like, that central banks had the ability to conduct monetary policy with no political tampering. But he also reiterated the economy going into stagflation here, just like the Fed head Jerome Powell has been doing recently. He said the key sentence that he said in the interview on Face the Nation on Sunday was, inflation rate is higher, growth is slower, and the job market is worse. That equals stagflation. So, what happened the last time we had stagflation in this country, the gold price went bananas. So the gold price is going bananas here again as stagflation is coming into the economy. And this is an admission by the Federal Reserve that it's coming into the economy. Not only that, but you've got the president of the United States who is threatening to try to fire him. And he's the one that appointed him. He called him a loser in a post on Truth Social over the weekend or this morning. So he's stoking the coals here because basically he needs to get the dollar lower. He needs to get interest rates lower, and the dollar has gone lower here. But he wants to get interest rates lower, and he's telling the world that the rest of the world wants interest rates lower. So the only way that he thinks he can do that is to try to replace the Fed chairman. Other presidents have tried to do that in the past and failed. And it's going to be interesting to see how this plays out. But the gold price is loving it.
What about exploreCos, Dave? I've been asking you for a couple of years. You've avoided gold exploreCos. Are you beginning to look at them again?
Yes, I am. I've got there's a stock in my portfolio that I've been telegraphing to my subscribers that, hey, I need to get out of this stock when it hits my average cost, which it's getting very close to doing, because the company has raised too much money at lower prices and also added too many warrants while doing it to basically take away the upside on the stock. I still believe in the company and what they're trying to do, but as far as getting there, these warrants are going to be roadblocks on the way there. So I see there's upside elsewhere in other stocks. I have a watch list of 20 stocks that I also provide to my subscribers that I have that basically is created to replace any juniors that I want to get out of. So I'm ready to replace it with another junior. So what I do is when that's about to happen, I start having conversations with these companies on this watch list, and I pick the one that I like the best. And right now, I'd like to have more exposure to earlier stage companies. And by earlier stage, I mean PE-stage, PEA-stage. I don't mean drill plays. I still don't think it's time for that. There's still too much value out there in these companies that have proved up these large resources. They've got these fantastic economic studies, and they're at the PEA stage. I like companies like that.
Are you looking for 18 months of runway in the treasury for the PEA stage companies before you invest, or how do you qualify these investments?
Oh, well, as far as it's jurisdiction, management, share structure, especially the permitting timeline. What's the permitting timeline look like in that jurisdiction that they're de-risking this project? Do they own the entire project? Is there any royalties on it? If there's not, will they be selling a royalty to help finance the project as well as a debt package, or how they plan on financing it? All these things. So but the biggest key is the management team. Have they got a successful track record, especially of raising money at the right times, and have they been able to raise money without a warrant? And what does the share structure look like right now? Because if you're at a PEA stage and you've already got a ton of shares out and a bunch of warrants, I'm not interested.
And in their treasury, how much cash would you like to see? Like a year and a half of runway?
Yeah, as far as the treasury is concerned, at least 12 months, right? And the access to capital also. You want to see that access to capital.
Dave, you mentioned a company that you're looking to sell because kind of the cap structure is not favorable to you as a non-warrant holder. So if it almost hit your target to sell, but it didn't hit it, I guess my question is, was it good enough? Or why do if it came close enough and you've been wanting to get out, why do you just get out?
Because I've got so much leverage in the sector with other with so many other positions. I don't need to. I don't have to do it now. I could just wait till it gets to my average cost. I don't want to lose money in a bull market, and I don't have to because I've got so much leverage in all these other stocks. But I also, I want to show to my subscribers that hey, that this is how you do this in this sector to limit your risk and to basically put your money in these companies with the most amount of upside. So like I said, also there's I've also got that list of my watch list with 20 more companies, and several of my subscribers have sent me notes in the past that hey, I got into this company on your watch list. I know it wasn't time for you to get in because you already had 20 companies. But they really appreciate the fact that I have all these 20 other companies that I previously vetted somewhat, and they get into them. And one of them today announced a takeover. So I've already got a couple of emails from subscribers that were very happy that I had this company on my watch list, and the stock is being taken over, and the company's being taken over.
We've been chatting for years, and it's been
Right.
be right, sit tight for probably 2 years, right?
Yes.
So, okay, how is the be
Yes.
right, sit right approach in your portfolio working for you right now in terms of like unrealized gains in your portfolio?
Okay, unrealized gains. There's about 40% of unrealized gains in my portfolio right now. Since the portfolio was started in January of 2016, I've taken out over 100% of realized gains out of the portfolio. So basically what I do is at the end of each year, I make sure that all the realized gains are taken out. I don't reinvest realized gains because this sector is so high risk that I learned that from the last bull market that I need to take my profits not only off the table, but out of the portfolio.
So with Rio Tinto, I believe it's 26 years trying to advance the Resolution Copper project in Arizona. BHP, my understanding, is the minority partner. because of the flip-flopping between, like with Trilogy Metals, Trump says, yes, you have the Ambler Access Road. Biden says, no, I'm revoking your permit. Trump says, no, you're going to get your permit back. With this flip-flopping, if you're like a financier and you're looking at this, right, and you want this miner to be able to pay back the capex they're going to borrow from you, if the miners don't self-finance this, I mean, I don't think I would write the check as a banker if I'm looking at this from a risk management standpoint, because you don't know what the next administration is going to do.
Right. But the positive is this administration is still in for another 3 3/4 years.
Yeah, but these things, like you get the finance package, it can take what? I don't know how many years. This one, they can take years to build before you get your money back.
Yes. As long as it looks like they're going to get those permits, within the next 3 3/4 years, I'd say yes, it wouldn't be a problem.
But Trilogy had their permit revoked. That was
Right.
my point. So is a permit a permit? A permit is a permit while I'm in power, because the next administration might not permit what I permitted.
Yeah, I mean that's the gamble, right? I mean that's the thing that these banks have to look at, that they have to factor in before they offer these loans. I was also thinking that there's a junior also that was just announced that the current U.S. administration is going to fast track, and that's Perpetua's Stribnite project. If you take a look at what happened with Perpetua this morning, the stock was initially up, but now there's a big, huge red candle on it. So the news is being sold on that. So that was already priced in.
Yeah. Any other insights on the sector, Dave? What key things should investors be looking at?
Well, as far as juniors are concerned?
Yeah, as far as juniors, how to play the junior gold stocks.
Well, if you take a look at the action in the sector recently, I mean, you had that huge downdraft, which took a lot of people out of position and out of this sector. I mean, I got several emails from, not from my subscribers, because I basically preempted what was going on in the sector and they were prepared for any volatility. But I got outside emails from people who were like, you know what, I'm sick of this sector, I'm out. It looks like the gold stocks are going to tank right along with the stock market, so I'm going to get out. And unfortunately, they got out at the exact wrong time, because we had that reversal, and it happened so fast and so furious that a lot of people were taken out of position. And when you're taken out of position, you're not very you're not wanting to chase anything afterwards, because you've been burned so many times in the past from chasing. So if you're looking to get into the sector now and you're just discovering it, it's like I said, it looks like that we've got a short to intermediate term top here. Now you take a look at companies that have gone up with the move, and look at entry points. But you also want to take a look at higher risk companies, like I said earlier, the earlier stage companies that really haven't moved, or there's a lot of optionality plays that really haven't gone up with the sector yet. So you want to take a look at those, but with the caveat that, like you mentioned, these companies have to be cashed up for at least 12 months. They have to have access to capital. It's preferable that they have that tight share structure. They don't have any warrants in the way. As far as the upside is concerned, you also want to look at that. You want to look at jurisdiction. You want to look at management and their track record. You want to look at all these things. And especially if you need to take a look at what the stock has been doing while everything else has been exploding here recently, because a lot of these juniors have exploded with the sector and with the gold price. Fortunately, myself and my subscribers own several of them. Especially in my top 10, and my top 10's done really well this year. It's outperformed the sector. So if you take a look at these companies, the best ones to look at, like I said, are the companies with you always want to start with management and jurisdiction, quality of the project, the share structure, and all that. I mean, that's very key. But like I said, it's that cash in the bank and that access to capital is a big one.
My last question, with the run-up in gold, has the JMJ portfolio seen new subscriber inflows? What is the JMJ sentiment at right now?
That's a great question. It's really interesting. I had a lot more subscribers come in February than I did in March and April. It's almost like that false move down and then the whipsaw move higher, it's almost like it freaked out people, and they're still tentative. Sure, I'm getting I'm getting new signups, but I'm not getting nearly as many as I expected. But what I want to really stress is my current subscribers. I'm really proud of them because I didn't get any panic emails from anybody when we had that quick downdraft, because it was very disheartening. It was very frustrating. But if you take a look at what happened, it was a necessity, because the sector, it was overbought at the time and it needed that downdraft. That false move created the energy for the whipsaw move up. And that breakout happened on big volume, which is what you need to see. If you see a breakout in the sector, which we kind of saw before that, we saw a breakout, but there was no volume to it, which told you that it wasn't going to hold. It was going to be a false breakout, and it was. But it was a false breakout in the sense that the false breakout only happened, it only lingered for about a week, and then we had the real breakout. This sector could do that to you. It's so small that it could take you out of position really, really quickly. And if you're not seasoned in the sector, then it can not only frustrate you, but it can make you throw up your hands and say, I never want to invest in this sector again, just at the time where you should be starting to invest in it, and you should be starting to put more money into it.
Dave, David Morgan has the famous saying about the junior gold stock sector, that it wears you out or it scares you out, right?
Or it scares you out. Yep, exactly. That's exactly right. I couldn't have said it better myself. And I've lived that. So you need to live that in this sector to not only expect it, but to learn how to deal with it when it happens. And if you're in this sector, you got to make sure that it's money that you don't need. Right? It's speculative money that you want that you want to double or triple and do really well with. But you don't want to put your grocery money in. You don't want to put your rent money in, your mortgage money, anything like that.
Should you sell your house and put it in junior gold stocks, Dave? You hypocrite.
Yeah, that's something that I did that I wouldn't recommend to anybody. It's a crazy chance that I took. I was young. I didn't have a family. And it was something that if I were to do it again, I definitely wouldn't. But that's just the way this sector is. And that's the attraction, right? Because it's high risk, high reward. The high reward doesn't come unless there's the high risk. And it's been so frustrating for so many people for so long, myself included, for the past few years, that to get out now would be a real shame, because now is just when it's starting to get good, because now the generalist investor is finally starting to come in here, because as I've said, over several interviews, that the one thing we needed in this sector was Western investment demand was gone. It was lacking because of AI stocks drawing their attention, and crypto. Well, with the latest move down in the stock market, it began with crypto and AI stocks tanking. The MAGS, the MAGS ETF, Magnificent 7 ETF, is down as much as gold is up this year. And it looks like Bitcoin's double topped at 108. I think what's happening right now is a lot of these people are just shell shocked because of the volatility in the sector. They've sold a lot of things and they're sitting in cash, and they're waiting to get into something else, waiting for the market to stabilize a bit to get into something else. And that something else is going to be gold stocks, because like I said, gold stocks have become this island of safety in this sea of volatility in the marketplace. Everything else has been going down, and people are going to look at, wow, what's going up? Gold stocks. And that's how I discovered this sector in 2003. After the dot-com bubble burst, I was looking around for something to put my money in, and I discovered this sector. And I think that's what people are thinking right now.
Well, Dave, thank you for your insights on today's show, and we'll chat with you again in about 30 days.
Absolutely. Looking forward to it, and it's always a pleasure.